zombie companies will be going bust. Banks will be in trouble. So what happens? Well, you rescue these things. How do you rescue them? Well, you replace private sector credit with government credit, which basically means that the whole of this government borrowing thing is just spirals out of control. I think we are on the cusp of that. And once it starts rocking, I don't think it'll take terribly long for the whole system to come down.
You're watching Silver News Daily. Subscribe for more.
Did you know that the money in your wallet might soon be worth less than paper it's printed on? World governments are standing on the edge of a financial precipice, and their failure to act could send us all plunging into an economic abyss. Imagine waking up to a world where your hard-earned savings are wiped out overnight, where fiat currencies crumble to dust, and where only those who were wise enough to invest in silver can weather the storm. Today, we're unraveling the shocking truth behind why the global economy is more fragile than ever, and how the collapse of fiat currency could trigger an unprecedented rush to safe haven assets like silver. Trust me, you don't want to miss what's coming next.
To the point where it's exceeding the 3-month, 3-year moving average. However it's constructed, it's been a very reliable indicator of a recession. And this is part of the reason why Jay Powell is now looking to manage the economy rather than managing inflation, because the threat is that the economy will go into recession. The problem here is that when you get an economy running into recession, Keynesian economics says that government's got to step in and increase the deficit in order to support the economy. Yeah, but they're already at 130% to GDP, and the foreigners are already backing off buying more debt. So this is a real crisis. And it's just amazing that so few people seem to, and particularly the politicians, seem to have absolutely no idea that this is a problem. And markets continue blithely along in their own course without even thinking about this. I mean, the dollar has been the world's reserve currency for so long. The assumption in America is everybody needs the dollar. They will keep on buying the dollar. They must keep on buying the dollar because they need it for trade. They need it to go and buy commodities, whatever. But actually, if you look at what's happening, the world is moving away from the dollar. And the people in America are the last to understand this. And I have to say that whenever you get a currency crisis, it is always the foreigners first who actually understand what's going on, because they don't need to hold a foreign currency. They will be the first to sell it. And then at some later stage, the domestic users of the currency begin to realize that it's the currency going down, not prices rising. And that brings me on to another element of this, and that is inflation. The idea of inflation, as put about by the establishment and by the press, is rising prices, which can be controlled. I mean, the latest one is, Ms. Harris saying that, price gouging and all the rest of it, and we will stop it. So we'll do what Diocletian did.
As we dig deeper into the current state of the global economy, it becomes increasingly clear that we're standing on extremely shaky ground. Government debts are soaring to unimaginable levels, trillions of dollars that can never realistically be repaid. In the United States alone, the national debt has ballooned to over 130% of GDP, a level not seen since the darkest days of World War II. And it's not just the U.S. countries around the world are drowning in debt, fueling a dangerous cycle where more borrowing is needed just to pay off the interest on existing loans. But it doesn't stop there. Inflation, the silent thief that slowly erodes the value of your money, is creeping higher and higher. Despite what the official numbers might say, the reality is that your dollar simply doesn't stretch as far as it used to. Everyday essentials, food, gas, housing, are becoming more expensive, and this isn't some temporary blip. This is the result of years of reckless monetary policies, where central banks have pumped trillions of dollars into the economy in a desperate attempt to keep it afloat. And here's the scary part. We're reaching the point of no return. The more money that's printed, the less it's worth. Governments around the world are trapped in a vicious cycle: print more money, fuel more inflation, and doing so, devalue their currencies even further. This isn't just bad news. It's the precursor to a full-blown financial meltdown. And as history has shown, when fiat currencies start to fail, people scramble to protect their wealth, and that's where silver comes in.
In fact, the percentage of publicly held debt in foreign ownership has actually fallen from just under 50% to just under 30%. So they're just not participating in the growth of your debt. Now, we're now talking about a situation where foreigners are going to get less, if you like, in return for lending money to the US government because interest rates will be lowered. And this was clearly signaled at Jackson Hole by Jay Powell. And I think that is a huge, huge mistake. And already we can see the effect on the dollar. The dollar has entered on a chart, something called the death cross, where the price is below the 55-day moving average, and the 55-day moving average is crossed below the 250-day moving average. All these, the price and average is all declining. That is a death cross. It's a very, very bearish signal. And you can understand why. And so, the other side of it, of course, is gold. And this is why gold is going so well. Under the gold price, you have a golden cross, which is the reverse of the death cross. So, you sell dollars, buy gold. It's actually as simple as that. But returning to the debt problem, this means that the debt is going to grow to the point where it just basically becomes impossible to fund. And the only way in which it can be funded is for interest rates to rise substantially, and at the same time for the government to cut its spending and to ensure that its budget is in balance. Now, here we are ahead of a presidential election in the presidential election year, and there's absolutely no hope of that. That is for sure. There's probably very little hope of it if what the two main contenders say about their policies come about. There's absolutely no hope of this happening in the next year or two. On top of that, you've got the problem that, for example, the SARM rule, which is based on the level of unemployment, when that rises.
The concept of fiat currency, the money we use every day, rests on a fragile foundation: trust. Trust in the government that issues it, trust in the stability of the economy, and trust that this paper money will hold its value over time. But what happens when that trust begins to erode? We are witnessing the early stages of a phenomenon that is repeated throughout history: the slow-motion collapse of fiat currencies. You see, fiat money is only as strong as the government backing it. Unlike gold or silver, it has no intrinsic value. It's worth something simply because we all agree that it is. But this system starts to break down when governments begin to abuse their power by printing more money than their economies can support. This isn't just theoretical. It's happening right now. From the Federal Reserve to the European Central Bank, central banks are printing money at an unprecedented rate, trying to stave off recessions and prop up economies that are buckling under the weight of unsustainable debt. This relentless money printing doesn't come without consequences. Each new dollar, euro, or yen created out of thin air dilutes the value of the money already in circulation. It's like adding water to soup. The more you add, the thinner and less nourishing it becomes. For years, this dilution has been happening slowly, almost imperceptibly. But as governments print more and more, the tipping point is approaching, the point where the value of fiat currencies begins to plummet rapidly and the trust in them evaporates. At this critical juncture, people begin to look for alternatives. Historically, when faith in fiat currencies has faltered, there's been a flight to assets that hold real value like silver. Unlike fiat money, silver can't be printed at will. Its value isn't based on government decrees, but on its intrinsic properties and the demand for it. This is the fiat currency trap. Once trust is lost, there's no going back. The money you rely on can lose its value almost overnight, leaving those who haven't prepared in a precarious position. As governments continue down this path, the inevitability of a shift from fiat currencies to tangible assets like silver becomes clearer with each passing day.
Roughly 10% to 15% of your assets in gold, or gold proxies, I mean mining shares or something like that. This was the protection, if you like. And indeed, if you go back to the 30s, they would say that a gentleman's portfolio was comprised of gilts and gold. No equities in there at all. Now, we've moved away from that. And I think that the average exposure, if you take the entire investment management industry, exposure to gold is probably not much more than 1%. So in other words, they haven't bought it. As things develop, and you've got this huge, great valuation disparity between the S&P and bond yields, that I think in a recession is going to close, and it's not going to close by bond yields falling. It's going to close by equity prices falling, and we're seeing sort of a few shaky things happening recently. I mean, the S&P is basically sort of 5 or 6 or 7 tech stocks led by Nvidia. Nvidia had a bit of a rocky time last night declaring their results, and the stock got hit pretty badly. I haven't seen how it's trading today, but you can see that there's sort of cracks, if you like, in this sort of high tech. You sort of huge, great corporations at the top of the S&P, their valuations are stalling. Let's put it that way. Now, when that goes into reverse, what does the fund manager do? Well, he's going to sort of start thinking. I mean, he might sort of think it's a good idea to buy gold, but he's got a problem because physical gold, is not a regulated investment, and he will have his compliance officer down on his back if he goes out and buys gold. Why are you doing this? Do you realize that this is not a regulated investment, et cetera, et cetera? You can see that they tend to steer clear of it. Now, they can get around this by ETFs. And so far, basically, ETFs, the flow in ETFs in the West has been basically sell, sell, sell. And, there's signs it's stabilizing, but they're not really buying ETFs on balance. And then there are mines, and mines are, fascinating because there's been no research really conducted by the big houses. They've all cut back on their mine research, so that's going to be a dramatic market. But we have,
as we piece together the troubling trends in today's global economy, one thing becomes alarmingly clear: a financial crisis is not just possible; it's inevitable. History has shown us time and again that economic systems built on unsustainable debt and rapid money printing are doomed to fail. The warning signs are all around us, yet most people are either unaware or in denial. Let's consider the parallels with past financial collapses. In the late 1920s, speculative bubbles and excessive borrowing led to the Great Depression, a devastating economic downturn that took years to recover from. Fast forward to 2008, and we see the same patterns emerge. Reckless lending practices and over-leveraged financial institutions spark a global financial meltdown. Now, in 2024, we're staring down the barrel of yet another crisis. But this time, the stakes are even higher. Governments and central banks have been playing a dangerous game, trying to delay the inevitable by piling on more debt and inflating asset bubbles. But there's only so long this can go on before the whole system comes crashing down. The global economy is like a house of cards. One wrong move, one unexpected event, and the entire structure could collapse. And what would trigger such a collapse? It could be anything. A geopolitical conflict, a sudden spike in interest rates, or even a loss of confidence in the US dollar. But the result would be the same: a cascading failure of financial institutions, market crashes, and a rapid devaluation of fiat currencies. When this happens, those who are unprepared will find their wealth wiped out almost overnight. But there's a way to safeguard against this looming disaster, and it lies in assets that have stood the test of time. Assets like silver. As the crisis unfolds, We can expect a massive shift from fiat currencies to tangible hard assets. Silver, with its unique properties and increasing industrial demand, will not only preserve wealth but also provide significant opportunities for growth as the rest of the financial world crumbles.
Well, it's precisely, as I've always maintained, it's not a question of gold going up, it's a question of paper currencies going down. And that continues to be the background to it. But there are other factors. You've got a very, very strong savings, what's the word I'm looking for? Savings ethos, if you like, in China, where households put aside on average something like 35% of their income. I mean, that's huge, $6 trillion. And you've got to think where that's going to go. It can't go into foreign currencies if they wanted to. Property markets shut off, and it's going into bank accounts. The same banks who, by regulation, are required to offer gold accounts to their customers. I mean, there's a minimum amount you put in, but the minimum amount is less than $100. So I would expect to see more and more of those gold accounts, just accumulating. And the banks which run them, these are not allocated accounts by any stretch of the imagination. They're unallocated accounts, but it does mean that the banks that offer them have got to have some decent gold cover. So they're in the market getting what they can. So that's keeping things short. Central banks understand what we're talking about. They won't admit it, but they do understand what we're talking about. And they want to get out of dollars and get into gold because they know that gold is money and dollars are credit. And what's happening to credit? The value of that credit is bound up in the faith, if you like, and trust in the US government. What's happening to that trust? I mean, that answers the question, the relationship between credit and money. On top of that, I think that the situation, if you like, of investing institutions in financial markets is very, very interesting. When I first became a stockbroker, it was normal to have an exposure of...
In the midst of economic turmoil, when traditional financial systems begin to falter, the search for stability becomes paramount. This is where silver enters the picture, not just as a precious metal, but as a beacon of safety in uncertain times. Historically, silver has been overshadowed by its more glamorous counterpart, gold, but what many don't realize is that silver possesses qualities that make it an even more compelling safe haven. Silver's value extends far beyond its monetary use. It's a crucial industrial metal with applications in everything from electronics to clean energy technologies. This dual role gives silver an edge that gold doesn't have. While gold's value is largely driven by investor sentiment, silver's price is also bolstered by tangible demand from industries around the world. This means that in addition to its status as a store of value, silver benefits from real-world applications that continue to grow, even in the face of economic downturns. During times of crisis, investors typically flock to assets that can preserve their wealth, and gold has traditionally been the go-to. However, silver offers a unique proposition. It's more affordable than gold, making it accessible to a broader range of investors, and its price movements are often more volatile. This volatility might seem like a drawback, but in a collapsing economy, it can actually be an advantage. Silver has the potential to generate higher returns, especially as demand surges during the flight to safety. Moreover, silver's physical properties, such as its conductivity and durability, ensure that it remains irreplaceable in key technological advancements. As the world pushes towards cleaner energy and technological innovation, silver's industrial demand is set to rise, providing a strong foundation for its value, even as fiat currencies and traditional assets falter. In essence, silver is not just a hedge against inflation or economic collapse. It's an asset that thrives on both its historical role as money and its indispensable role in the future of technology. As we face the growing uncertainties of the global economy, Silver stands out as a safe haven that offers both security and opportunity. The time to consider silver is now, before the full extent of the crisis hits, and its true value becomes impossible to ignore.
Dead right. Yeah, when when they decided to suspend the Bretton Woods Agreement. Yeah, absolutely. It doesn't work. It never works. But the point about this is that the driver of inflation is actually budget deficit and consumer borrowing to fund consumption. Those are the things that drive up prices, or, if you like, put the other way around and more accurately, drive down the purchasing power of the currency. And that is exactly the situation we still have, and it's going to get worse, particularly from the government end. And when you look at consumer behavior, savings in America have collapsed. They've gone negative. So, this is a disaster for the economy, where you have got a combination of a debt problem, you have got a nasty recession, potentially a nasty recession, and I would actually call it a slump in the early stages of development, and on top of that, rising prices or a loss of purchasing power in the currency. This is the worst possible stagflationary scenario. Now, we had this back in 1976, and in 1975, actually, sterling collapsed against the dollar. It went down to around about, I think, $1.10, roughly where it got to in recent history, maybe even a bit lower than that. America came in and loaned us money in order to save the currency, which was fine. But obviously the condition was that the IMF come in, the IMF repays America, the IMF puts in controls, requirements, and all the rest of it, which takes it away from the politicians. And this is exactly what happened. The IMF said, right, you've got to balance your budget. Don't care. You raise your taxes, however you do it, but you've got to have a balanced budget. And in order to fund the situation, interest rates rose to the point where we had 3 bond issues of 15, 15.25%, and 15.5%. Now, the problem that America faces is that there isn't someone like the IMF to come along and rescue them. I mean, it's just not there. Because apart from anything else, you own the IMF. I mean, figuratively speaking, the IMF might account in SDRs, but basically it's a dollar-based organization. And it's not in a position to rescue the dollar. So you've got you have a situation which is worse than we had potentially in 1976, when we were funding at 15.5% coupons. Just imagine what that does to the US economy. Is it avoidable? I think not. Why? Because of the debt trap. And I think, we've talked on this channel so frequently about the dangers in the banking system, zombie companies, and all these things, geopolitics, et cetera, et cetera. But I think the one thing which, above anything else, will end the fiat currency system is actually the collapse of the dollar because of the debt trap, which it is now entering into in just big time, absolutely big time.
Silver's value is not just tied to its role as a monetary metal. It's deeply embedded in the fabric of modern industry. As the global economy evolves, so does the demand for silver, driven by its unique properties that make it indispensable in a wide array of technological applications. In fact, we are witnessing a surge in industrial demand for silver like never before, and this trend is poised to accelerate in the coming years. One of the most significant drivers of silver demand is the clean energy revolution. As the world shifts towards renewable energy sources, silver plays a critical role, especially in the production of solar panels. Silver's exceptional conductivity and reflectivity make it a key component in photovoltaic cells, which convert sunlight into electricity. With governments around the globe pushing for greener energy solutions to combat climate change, the demand for solar energy is expected to skyrocket. This translates directly into increased demand for silver, as there is currently no viable substitute for its role in these technologies. But the story doesn't end with solar energy. Silver is also essential in the electronics industry, where it is used in everything from smartphones and computers to electric vehicles and advanced medical devices. As technology continues to advance, the need for high-performance materials like silver will only grow. The burgeoning demand for electric vehicles, in particular, is a game changer. These vehicles require more silver than traditional cars, thanks to their reliance on sophisticated electronics and batteries, further fueling the demand for this versatile metal. Moreover, silver's antibacterial properties make it invaluable in healthcare settings, where it is used in medical instruments, wound dressings, and even water purification systems. As populations grow and healthcare technology advances, silver's role in this sector will become even more pronounced. What makes silver even more compelling as an investment is the tightening supply. While demand is surging, the supply of silver is becoming increasingly constrained. Many of the world's primary silver mines are aging, and new mining projects are not coming online fast enough to keep up with demand. This supply-demand imbalance is creating the perfect storm for silver prices to rise, making it an attractive asset not just for its safe haven qualities, but for its growth potential as well. In short, silver is more than just a hedge against economic instability. It's a metal that the world needs to power the future. As the clean energy transition gains momentum and technology continues to advance, industrial demand for silver is set to climb even higher, positioning it as a key asset in any forward-looking investment portfolio.
Between them. And their plan basically is to get America out of Asia. I just cannot see how China would go back on that plan. It doesn't make any sense at all. And it doesn't make any sense, particularly in the knowledge that in recent days, I think in the last month, Putin has traveled around China, North Korea, even Vietnam and Iran, and got them all into signing a joint, if you like, defense agreement between them. Now, I don't think this is quite on the NATO lines, attack one of the NATO members and we'll all have to attack you sort of thing. But you can see which way this was going. And I think that it was a very important signal to the US intelligence community that, attack Russia and you're going to take on not just Russia, but an awful lot else. I also think that returning to the Middle East, or what they're now calling West Asia, that another aspect of this, I think, is that Russia is probably telling on back channels, the Jake Sullivans of this world, look, if you're thinking of attacking us, then we will let Iran wipe out Israel. They have got something which is called a Murmansk B, I think it is, which is the most extraordinary machine. It pushes out an extremely high voltage electronic signal which interferes with all radio communications. Now, believe it or not, within something like 5,000 to 8,000 kilometers. We're talking about up to 5,000 miles. Now, if they use that against Israel, it would wipe out the dome, the Iron Dome. It would also interfere with communications for the two American carrier fleets in the Eastern Mediterranean. So that, I think, is another aspect. And nobody's talking about that. This is speculation on my part. But I just think, if I was in Putin's shoes, that is what I would do. The problem that the Americans now have is how do they back down from this situation? That's going to be interesting. And I just hope they do back down, because the alternative...
When it comes to safe haven investments, gold has long been the undisputed champion, but silver is increasingly emerging from its shadow, offering unique advantages that make it a compelling alternative. While both metals share a historical reputation as stores of value, the dynamics driving their prices and their roles in the modern economy differ significantly. In this section, we'll delve into why silver might not only match gold, but in many ways, outshine it in the coming years. First, let's talk about accessibility. Gold is often viewed as a wealthy investor's asset due to its high price per ounce. This makes it less accessible to everyday investors who are looking to protect their wealth in uncertain times. Silver, on the other hand, is much more affordable, allowing a broader range of investors to participate in the market. This accessibility can lead to increased demand during periods of economic stress, driving up silver prices more dramatically than gold. Next, consider volatility. While gold is known for its relative stability, silver's price movements are typically more volatile. This might sound like a drawback, but in a rapidly changing economic environment, this volatility can actually work in an investor's favor. Historically, during periods of economic crisis, silver's price has often outpaced gold's in percentage terms. For example, during the 2008 financial crisis, silver's price nearly doubled while gold saw a more modest increase. This kind of price action can result in higher returns for those who invest in silver at the right time. Another critical difference lies in the industrial demand we discussed earlier. Gold's value is almost entirely driven by investor sentiment and its role as a monetary asset. Silver, however, benefits from robust industrial demand, particularly in sectors like renewable energy, electronics, and healthcare. This dual demand, both as an investment and as an industrial commodity, gives silver a unique edge. Even if investor demand wanes temporarily, industrial demand can provide a floor to silver prices, making it less susceptible to prolonged downturns. Let's not forget the gold-to-silver ratio, a key indicator used by investors to gauge the relative value of these two metals. Historically, the ratio has hovered around 50:1, meaning it took 50 ounces of silver to buy 1 ounce of gold. However, this ratio has fluctuated dramatically in recent years, reaching highs of over 80:1. Such extremes suggest that silver is significantly undervalued relative to gold, presenting a potential opportunity for investors. As the global economy adjusts, we'd see this ratio move back towards its historical average, resulting in substantial gains for silver holders. Finally, consider the supply constraints. While both gold and silver are finite resources, silver's supply is more constrained due to decreasing mine production and limited new mining projects. With silver also being consumed in industrial processes, its above-ground supply diminishes more rapidly than gold's, which is largely hoarded. This shrinking supply, coupled with rising demand, sets the stage for a potential silver price surge. In conclusion, while gold will always have its place as a safe haven asset, silver offers unique advantages that could make it a more lucrative investment in the years to come. Its affordability, volatility, industrial demand, and current undervaluation relative to gold all point to a metal that is poised for significant growth. For investors looking to diversify their portfolios and hedge against economic uncertainty, silver is not just an alternative to gold. It might be the smarter choice.
Europe, what Russia is doing is it is making it clear to the Americans that it will attack America, which it can do, obviously. I mean, it's just across the water from Alaska. It will not confine a nuclear escalation to Europe. So it knows from the way America has behaved towards Europe. I mean, for example, the floods of refugees. Who cares, you know? I mean, they've destabilized Europe with a refugee problem. But does America care? No, they don't. The only thing that the Americans really care about, as far as the Russians are concerned and as far as us Europeans are concerned, is an attack on their territory. And that's the basis of the threat from Russia. Now, this is a situation which seems to be escalating the whole time, you know, with the invasion into Kursk, for example, which involves, you know, if not NATO forces, mercenaries, if I can put them that, you know, undercover troops, as it were, certainly American and British equipment. I understand that the French and Poles are in there as troops, as well as some Americans. And the attempt is to try and expand that too into other oblasts, if you like, apart from just Kursk. So you can see that this is a situation which is extremely delicate as far as Russia is concerned. And the idea that we are gaining on Russia is therefore immensely dangerous. Now, I notice, and I think there is a little bit of hope here, I noticed that Jake Sullivan, who is Biden's top security man, is on a 3-day visit to Beijing and has been having very high-level talks. I mean, even with President Xi, who very often doesn't see senior dignitaries from other countries. Now, we know that, the press release say, it's all about, the South China Sea and, automobile exports to America, and all this sort of guff. I would be very surprised if Jake Sullivan is not trying to find out the Chinese attitude to the threat against America from Russia. And I think that President Xi would make it absolutely clear that when push comes to shove, she would side with Russia. Now, that is terribly important because, Jake Sullivan's got to go back and give the message to the American administration that this is not going to work. The idea that we can, if you like, disassemble Russia with China just sitting on the sidelines, forget it. They will come in on Russia's side. And the reason they will come in on Russia's side is because they have this plan.
As the demand for silver continues to rise, driven by both its investment appeal and its critical role in various industries, one factor that is often overlooked is the tightening supply of this precious metal. Unlike fiat currencies, which can be printed in unlimited quantities, silver is a finite resource, and its supply is becoming increasingly constrained. This imbalance between rising demand and shrinking supply is setting the stage for a significant price appreciation, making silver an even more attractive asset. One of the key challenges facing the silver market is the decline in mine production. Many of the world's largest silver mines are maturing, and new discoveries are becoming rarer. This isn't just a temporary slowdown. It's a structural issue. Silver is often mined as a byproduct of other metals like copper, zinc, and lead. As production in these primary metals fluctuates, so does the supply of silver. In recent years, lower ore grades, increased extraction costs, and environmental regulations have further restricted the output from existing silver mines. As a result, global silver production has struggled to keep pace with rising demand. But the supply-side issues don't stop at mining. Recycling, which historically has supplemented silver supply, is also facing challenges. While the recycling of industrial silver is relatively steady, the amount of silver recovered from scrap has declined. This is partly due to the lower silver content in modern electronics and other products, making recycling less economically viable. Additionally, the long lifespan of many silver-containing products means that significant amounts of silver are tied up and not readily available to the market. The limited growth in silver supply is juxtaposed against the backdrop of a world increasingly reliant on this metal. As discussed in earlier sections, the clean energy sector, especially solar power, is driving unprecedented demand for silver. Electric vehicles, another rapidly growing industry, require substantial amounts of silver for their electronics and batteries. These industrial uses are not just trends. They represent a fundamental shift in the global economy towards more sustainable and technologically advanced solutions, all of which require silver. This supply-demand imbalance is creating what some experts call a perfect storm for silver prices. With demand set to outstrip supply, the market could experience significant upward pressure on prices. Investors who recognize this dynamic early stand to benefit as the value of silver rises, potentially outpacing other assets in their portfolios. Moreover, as the availability of silver becomes more constrained, the strategic importance of securing physical silver increases. Unlike paper assets, Physical silver cannot be created or manipulated by financial institutions. This makes it a more reliable store of value in times of economic uncertainty, when the trust in paper currencies and digital assets may be eroded. In conclusion, the supply constraints in the silver market are not just a minor detail, they are a critical factor that could drive the next major bull run in silver prices. As demand continues to grow and supply struggles to keep up, silver's value is poised to increase significantly. For those looking to protect and grow their wealth in an uncertain economic landscape, silver offers a rare combination of security and growth potential that is becoming increasingly hard to ignore.
It's actually I think we're at a very, very dangerous point, and I don't think people generally realize. I mean, the problem we have analyzing what's going on with Russia, the Ukraine situation, China, and so on, is that our blessed governments the propaganda they put out is so misleading. It really is. And no media outlet dare contradict it. It goes along with it, it amplifies it, and makes the situation even more confusing and more dangerous, may I say. The current situation, there's a guy called Gilbert Doctorow who I met actually, believe it or not, at a barbecue outside Brussels where I was speaking. And he was one of the guests there. Charming man, Russian, educated in America, and he regularly appears on Judge Neapolitano's show about the situation in Russia. And not just what he says, but also what I've read. You saw some time ago, it wasn't all that long ago really, that there was a drone attack on radar stations in southern Russia from the Ukraine, which wiped them out. At the same time, there are two carrier fleets, American carrier fleets in the Eastern Mediterranean. Now, everybody assumes that that, if you like, is some sort of defensive thing against Iran. It's a sort of show against Iran. Don't escalate this because we're here, and if you want to involve us, then you know the story. But the fact of the matter is that from the Eastern Mediterranean, they're also in range of Russia. And Russia is now, according to statements by Lavrov, who speaks for Putin, and also his deputy foreign minister, it is quite clear that Russia is actually very alarmed by this and is seriously considering a nuclear response. Now, the problem with it is that a nuclear response in Europe would actually wipe out.
Investing in silver offers a myriad of opportunities to safeguard wealth, especially in these uncertain times. The key is to understand the different ways to engage with this precious metal, tailoring your approach to suit your financial goals and risk tolerance. One of the most direct methods of investing in silver is through physical ownership. Holding silver bars or coins allows you to possess a tangible asset that can't be easily manipulated by market forces or financial institutions. This physical form of investment is particularly appealing in times of economic instability, where the value of fiat currencies might plummet. However, the responsibility of securely storing these assets can't be understated. Whether kept in a home safe or in a professionally managed vault, physical silver provides a sense of security that few other investments can offer. For those who prefer a more liquid and easily tradable form of investment, silver-related financial instruments, such as exchange-traded funds, ETFs or exchange-traded commodities, etc., offer a compelling alternative. These instruments allow investors to gain exposure to the silver market without the need to handle physical metal. Traded on major stock exchanges, they provide the flexibility to enter or exit positions with ease, making them suitable for both long-term holdings and short-term market plays. While they offer convenience, it's essential to consider the associated management fees, which can subtly impact returns over time. Another avenue to consider is investing in silver mining companies. These stocks are often more volatile than the metal itself, as they are influenced not only by silver prices, but also by the operational performance of the mining companies. When silver prices rise, these stocks tend to experience amplified gains due to their leveraged exposure to the metal. However, this potential for higher returns comes with increased risks, including operational difficulties, geopolitical factors, and fluctuating production costs. Thus, investing in silver mining stocks requires careful consideration of these variables and a willingness to accept higher volatility. For more sophisticated investors, the silver market also offers futures and options as a way to speculate on price movements. These instruments allow investors to bet on future prices or hedge existing positions, potentially leading to significant gains. However, they also carry a high level of risk, as the leverage involved can amplify losses just as easily as it can amplify gains. Therefore, these tools are best used by those who have a deep understanding of market dynamics and are comfortable with high-stakes investments. Lastly, it's worth noting the broader context in which silver operates. While it is often compared to gold, silver's unique industrial applications give it a dual character as both a safe haven and a growth asset. As global demand for technology and green energy increases, silver's industrial demand is set to rise, providing a strong tailwind for its value. This makes silver an attractive option, not just for those looking to hedge against economic downturns, but also for those seeking growth in the long term. Ultimately, the best strategy for investing in silver will depend on your individual circumstances and financial objectives. Whether you choose to invest directly in physical silver, gain exposure through financial instruments, or explore the potential of silver mining stocks, the key is to align your approach with the broader economic landscape and your personal risk appetite. In doing so, you can position yourself to benefit from silver's unique combination of stability and growth potential in these uncertain times.
This thing with gold exposure, not much more than 1%, if that. I mean, that's got to get up to 2, 3, 4, 5%. Where's it going to come from? Well, the answer basically, we're seeing already with, as I described earlier, the dollar is trade weighted as going into a death cross, while at the same time, gold is, is found support at its 55-day moving average, and it's knocking on new high ground. I mean, it's fascinating how the buyers are in there at $2,500, and they try and cap it at $2,525 to 30. It's going to break out of there, and when it breaks out of there, it'll probably run very, very quickly. So, we are on the cusp of something I think very, very interesting as far as gold as a whole is concerned. Now, as far as silver is concerned, that is also very interesting, but for rather different reasons. There was, various people picked up on a story that Samsung have got a new solid-state battery which uses silver and not that very, very dangerous lithium. It's got the range, it's not so heavy. I mean, it's got everything to recommend it. Rapid charging, yeah. I mean, it's just incredible. You can get something like 600 miles and 10 minutes charge. I mean, whatever the figures are. I mean, that makes the whole of the EV thing sensible. But there isn't the infrastructure to cover those huge charging currents. That's going to take time to put in. But nonetheless, China will copy Samsung. They will have the same technology very, very rapidly. They will put in the infrastructure. And we'll be finding that these Chinese cars, even with a 100% tariff, are fiercely competitive compared with anything coming out of anywhere else. This is the reality of the situation. It's going to mean that silver, which has been in supply deficit for the last 4 years, according to the Silver Institute, silver has got the potential, really, I think, to easily double from here. Whether it does or not, we'll see. But you can see that with a rising gold price, silver is likely to rise very rapidly as well. And I think the gold-silver ratio will fall from current, 83, 84, whatever it is, easily down to below 60 on on what is developing, a mixture of the monetary situation with the collapse in credit and, physical demand for silver, mainly from Asia, which is where all the action is.